Hey everyone, welcome back to the Collector's Compass, the official podcast of Collectors MD, where we explore the intersection of collecting, mental wellness, and responsible engagement across the modern hobby and beyond. I'm your host, Alyx founder of Collectors MD, and today's episode is a really personal one for me. I'm joined by one of my closest friends, someone I've known for decades, Eric Stearns. Eric and I went to Penn State together. We were in the same fraternity, roommates in college, and roommates again in New York City after graduation. We've grown up together through a lot of life, a lot of career changes, and a lot of market cycles. Professionally, Eric is the head of corporate development at Viant Technology with extensive experience across investment banking, capital markets, M&A, and corporate finance. He understands investing at a very deep level, things like traditional markets, day trading, crypto, NFTs. And like many of us, he also re-entered the sports card hobby in early 2020, right as everything was exploding. That's why this conversation matters. Because over the last 5 to 6 years, we've watched markets, collecting, and risk-taking behaviors become faster, louder, and more emotionally charged. And more people are quietly asking a really hard question. When does investing stop being investing and start feeling like gambling? This isn't an anti-investing conversation, and this isn't anti-hobby. It's about understanding behavior, psychology, and harm, and why so many people feel overwhelmed, stressed, or ashamed without fully understanding why. Eric brings a rare perspective, someone who understands the mechanics of finance and the emotional realities behind them. Eric, thanks for being here.
Hey man, thanks for having me. Really excited. I think everything you're doing is great, and you're the one who got me into the hobby. So would love to share any helpful perspectives.
Absolutely. All right, let's get into it. So our first segment is called How 2020 Changed Everything. So I want to start at the inflection point in early 2020, around the time the pandemic was starting. There were lockdowns, stimulus, zero commission trading, crypto was taking off. You had NFTs becoming super popular. And then, of course, the sports card hobby absolutely exploding. So from your vantage point in finance, what fundamentally changed in how people started engaging with risk during that time?
Yeah, I mean, look, let's not also forget that those people had a lot more time, right? Like we weren't commuting. People were working from home, so meetings were shorter, and all various asset classes. I mean, for me personally, I was looking into real estate, I was looking into crypto, I was looking into sports cards. I think the aspect of investing behind the tailwinds of the markets hitting all-time highs, with obviously the tremendous stimulus that put a lot of money in people's pockets. I mean, the back half of 2020 and 2021 were record years, at least on Wall Street, right? We haven't replicated 2021 ever since. And there was a lot of deal making, a lot of new funds being raised. I think the markets were just absolutely booming. And like for when it pertains to sports cards specifically, I think it all just happened so fast, right? I mean, the hobby's been around forever, and then you just had a ton of new interest from people like myself who, yes, yeah, I collected a little bit growing up. I think what really got my interest, though, specifically, was just seeing content on YouTube, on Instagram, and then seeing the crazy prices that some of the cards were going for. And I looked at it honestly from an investing lens. I've never been like into collecting just for the art or for having something specific. Nothing wrong with that. I'm sure the majority of the hobby actually like yourself enjoys the visual and having that component of the assets. But for me specifically, I thought it was a really unique and misunderstood market, and had the opportunity to hopefully buy low and sell high. And I attacked it from several different angles. I think you and I, we'd buy individual cards, we would do breaks, we would buy crazy priced new packs, blaster packs, the larger set packs. I also made a couple of venture capital investments, and both of the companies I invested in, Starstock and Collectible, their mission was to create more of like a marketplace and to make the assets more of like securities, kind of like how stocks work. So I thought it was really unique, but it turns out that component of the market never really came to fruition. I think a large part of of the hobby is kind of in it for the long term, and not necessarily to just make a quick flip, which is what I came into it for. I was just looking for any way to make additional money. It was COVID, had a lot of free time, and it was fun. But I probably lost money on majority of the purchases I made. So from that aspect, it certainly cooled off. I still remain very interested, and I still follow it. But in terms of making actual investments into the space, I haven't done that in quite some time.
Gotcha. Yeah, you bring up a lot of really good points. I think like during the pandemic specifically, all of a sudden you had millions of people that were stuck at home, flush
Yeah,
with cash, bored, and being funneled into markets and hobbies that looked like, entertainment on the surface, but behaved a lot like speculation underneath, right? Like cards stopped being about collecting and just started being talked about like assets and, the flipping mentality and the investments, overnight, almost overnight. And that
yeah,
shift is important because that's the environment that Collectors MD was born out of. We're not reacting to some fringe issue. We're responding to a structural change in how people engage with this hobby now, and that's why scaling this message matters so much. The audience already exists. We're just
yeah,
meeting them where they are.
yeah,
So, one of the biggest issues that I think came out during this period was the rise of again the quick flip mentality. Like cards stopped being something you held or enjoyed and just started being something that you were supposed to turn immediately for profit, right?
yeah.
The
And
problem there is
just
that,
to jump in real quick, that was the goal, but because of you remember when we first got into it,
yeah, it
the backlog of PSA was
was
ridiculous.
absurd. Yeah,
I would buy raw cards. I would build models. I would say, okay, if I buy these 10 Joe Burrow, prisms, right, and X percentage of, is a nine, X percent dimes, I could make this profit. And I
right,
was actually building out those models because I had, I was trying to make good investments, and it was fun.
right.
By the time I send it to PSA, I wouldn't get them back 3, 4, like even longer months. We're
Yeah,
talking months. And by that time, NFL season's over, the card's down 50%. I'm stuck with a loss.
right. So the whole issue is that this creates insane volatility. Like
Yes.
prices aren't moving based on fundamentals or long-term demand. They're moving on things like hype cycles and social media buzz and release week urgency. And then you brought up another nuance, which is players get hurt,
Yeah.
seasons end, teams lose, scandals happen. So there's this whole other layer that happens within sports cards specifically, that drives this volatility,
Yeah.
right? And so when everyone's trying to flip at once, the floor sort of disappears just as fast as it shows up. So you get these massive spikes where like something feels like a sure thing. And then the moment attention shifts, like supply floods the market and the values crash. And
Yeah.
the same, card that felt safe last week suddenly, can't find a buyer at even half the price. And
Yeah.
so that volatility doesn't just hurt people's finances and their wallets, it messes with people psychologically, and it trains collectors to chase timing instead of intention, and it keeps people locked in this constant state of buy now or miss out, which is that
Yeah.
FOMO and urgency we always talk about. And that's a big
Yeah.
part of why so many people just always like are feeling stressed or
Yeah.
reactive and upside down financially and what's supposed to be at the end of the day a hobby.
Yeah.
So
Well, you're completely right. And, to me, it was like gambling because I never did, and I still don't understand like the proper value of these cards. Like to me, like, and I don't know this for a fact, but I'm assuming like, why is a Brock Purdy, rookie card worth more than a Hall of Famer 30 years ago?
Joe
Like,
Montana, perfect
exactly.
example.
Is it the type of card? Is it is it the how many are outstanding? Is it the likability of the player? Or is it just, like, what have you done for me lately? Or is it team success? Like, I could never figure that component out. And, especially with the new, the new releases, like those values from when we were investing, like, remember that John Morant, Zion Williamson, we both thought they're going to be Hall of Famers. They're terrible.
Yeah, you're investing in speculation. And so like you bring up a really good point. Like a Brock Purdy selling better than somebody like Joe Montana, who, former 49er, Hall of Famer, considered by many as one of the best quarterbacks of all time. That alone really tells you everything you need to know about where the hobby is right now, right? Like Montana is a finished story. He's an all-time great, fully priced, no mystery left. His cards have history, legacy, and stability, but they don't promise upside. And so there's no like what if left, right? So somebody like Brock Purdy, on the other hand, represents the unknown, the possibility. You're not buying what he is today, you're buying what he might become. And so people are just speculating on the future, not collecting the past, right? And in a market driven by the hype mentality, the quick flips, all of what we just laid out, potential ends up selling better than certainty, right? And so that's why, like Purdy cards or John Moran or Zion Williamson, when they were young rookies, move faster and at higher prices in the moment. They offer volatility, and volatility is attractive to people chasing returns, even if the odds are stacked against it. The idea that you might be early is more exciting than owning something that's already proven.
Right.
And so it's less about football knowledge and more about the psychology behind it, like the upside, the fact that upside beats legacy in a hype driven market. And so that's what we see. That's what we have seen across the board. Look at some of these names in the NBA now: Cooper Flagg, Victor Wembanyama, Anthony Edwards, Cade Cunningham. A lot of these guys sell better than like Kobe Bryant or Vince Carter or Tracy McGrady, or like some of the superstars that we watched growing up that, are all-time greats. And again, it's just pure speculation. And, people enjoy the volatility. People enjoy the opportunity to invest in, a possibility.
Yeah.
So, one thing we hear constantly at Collectors MD and in our meetings is that, people didn't necessarily feel reckless. They felt behind, right? They felt like they were behind the market, behind the hype, behind everyone else. So how much do you think of that vulnerability came from, how fast everything suddenly moved?
Yeah, well, there were some tools. I know you had Jeff on. Like I was a fan of his product. Obviously, Car Ladder is great, but you're right. Like
market movers.
Yeah, and market movers and Car Ladder. I use both.
Car Ladder is a different entity. They're competitors, but yeah.
No, I'm saying I use both.
Use both. Got it.
Yeah. And they were great. Like I loved seeing kind of the historical prices and trying to look at moving averages and if something is like undervalued, overvalued. Basically, what I do and have done for my whole career with companies. I worked on Wall Street for 13 years, and now I'm doing M&A for one of my clients. So evaluating businesses and valuation is what I do on a daily basis. So it felt almost hopeless, right? Because you would see your investment just completely tank, even though the player had a good year, and you're just left scratching your head. So there was no logic behind it. It's pretty similar to crypto, where you have these huge swings and nobody understands why or what it is driving anything behind it. And you're absolutely right. Like you asked, about the vulnerability. Like it's super vulnerable. I mean, I would say it's not to the extreme as crypto, right? Where you could literally get wiped out overnight over nothing. But like these cards just move in one direction or the other with not a lot of information kind of driving that. So it was frustrating. Like I really enjoyed it, and I wish I did better. But it's for me. I still have a small personal collection, but I haven't made any meaningful investments because it's very difficult to make money in this hobby. And a lot of people, including myself, but I was responsible with it. But I'm sure a lot of people have lost a lot of money, and we haven't even brought up the kind of the scamming and like, I see on the news all this stuff going on with it just doesn't. There's not a lot of transparency in the market.
Yeah, you nailed that. Transparency is a major issue in this hobby right now, and every single week it seems like there's a scandal or a headline that's framing the hobby in a negative light. And it's unfortunate, but there are just a lot of bad actors out there. And so we're doing our part as far as trying to advocate for reform and, more transparency, more accountability from the platforms, the manufacturers, the influencers, creators, etc. But you brought up another really good point, and I think that's that sports cards are attractive to sports fans because they feel familiar, it's tied to emotion, and it's controllable in a way that stocks aren't. Right? You already know the players. You watch and analyze the game. You follow all of the narratives and the news. So buying a card feels like more of an informed decision as opposed to a financial one, and it feels like you're betting on something you understand, not reading a balance sheet or trusting an earnings call. There's also the instant feedback, right? A player has a big game, his card spikes, and you're rooting for that player. You're watching him perform, which you already enjoy doing. And so that connection between performance and price, feels direct and rewarding, even though it's often misleading. Something like a stock or a crypto or an NFT, like other, assets, they move slower, they feel abstract, they don't give you that same sort of opportunity to own and hold something tangible, right? And like the dopamine hit that we always talk about is just a little bit different. So for a sports fan, cards feel less risky even when they're not. They feel like fandom, not investing, which is exactly why they pull people in so fast and so many people are just getting burnt.
Yeah.
So as someone who understands markets deeply, and we're going to get into this in a little bit more detail shortly, did you see the warning signs early on that this wasn't just a boom, but something that could cause real harm? And I'm talking about early in 2020 when you got involved in the hobby.
The main red flag was we were so excited for that Joe Burrow rookie class, Herbert rookie class, Prism release, right?
Right.
I think this is off memory. I think I paid around $1,300 for that box, which makes absolutely no sense. That is insane. Like the price of that. And then I was like, that seems high. Let me look back historically. That's a fraction of what they were charging 5 years ago. So they just completely jacked up the price. And, no one's going to make their money back. I think my box was actually pretty good. I remember you got skunked a little bit. I probably made back like 60-70% of what I put in. I had some good hits, but almost from my experience personally, like you're losing money 80-90% of the time, but you want that 1 in 1 million chance of getting the 1 of 1.
Exactly. It's a glorified scratch off, right? You're paying that $1,200 in hopes that you hit that 6-figure Burrow 1 of 1 that everybody's chasing, right? The same thing applies today. I mean, it's only gotten worse. It's only gotten more lucrative in terms of Fanatics and their takeover of all the licensing and how they've price gouged and just increased a lot of the prices across the board. I mean, Topps basketball, this is a major pivotal week for the hobby in terms of releases. It's one of the most historical releases of all time. Licensed Topps basketball is returning for the first time in almost 2 decades. That's like monumental for the hobby. And people have been looking forward to this for years, ever since it was announced that Fanatics was going to, take over the licensing. And here it is with Cooper Flag as the headline. Do you know how much boxes cost?
1,500, 2,000?
Yeah. So there are a few different formats. So do you remember first off the line? Do you remember that format for Panini?
This is another part of the problem that maybe we can get into after. Is there's so many different varieties of cards that if I didn't have if you didn't explain to me, okay, Prism, Optic, Don Russ, then here you have the luxury box. If I didn't actually know that, like it would have been extremely difficult to kind of just get into. Similar with Pokemon, which I've been asking you questions about as well, because that seems to be a safer bet these days. But that's another part of the problem is just all these different variants. It's like
it's not just the products, it's the formats, it's the retail, the hobby, the first off the line. Now Fanatics and Topps have introduced their version of first off the line, which is called first day issue. They're calling it FDI. And so that came out a couple weeks ago, or I think it was last week. Breakers and card shops started to get their boxes. So they sold them in a reverse Dutch auction, the same way Panini would sell first off the line, which is already confusing in its own right. But the prices started at 3,500. They ended up selling out at 1,750. The price of the FDI boxes now, which only offers you 2 exclusives, and it's just, one cards to 12, one cards to 8. There's no, like, you don't get a better chance of like one of the logo men or a one of one superfractor or anything like that. You just get 2 extra exclusives. Those boxes are now reselling on the aftermarket for upwards of $3,500.
That is this a supply and demand issue, or like what? Who's paying these prices?
So a lot of breakers are selling it in the form of PYTs or random team breaks. But when you do the math and you calculate how much they're collecting, I'm seeing some breakers, basically pricing boxes out at $6,000-$7,000 because there's demand for it. People are willing to pay $1,000 a spot in a 2-case break, or I think I saw Cooper Flag was $12,000 in a pick your player 2-case break. $12,000 just for a potential chance at getting a Cooper Flag card.
Yeah, I mean, look,
that's absolutely insane.
Yeah, for the person who did that, I mean, if you have the capital to do it, and go for it. But I think that type of pricing, to me, based on the market size, the state of the economy, just seems unsustainable. I mean, if they're going to continue this for several years.
Yeah, that's exactly it. We always say, look, if you're spending within your means, within your budget, and you can afford to participate in these high-end breaks or buy high-end personals and just, rip until you're fulfilled, or, rip until however your heart desires, go for it. But if you're doing anything that is out of bounds in terms of your budget, your means, hiding things from loved ones, hiding transactions, hiding packages, waking up with that feeling of guilt, shame, regret the next day, then that's, it's time to take a step back and sort of reevaluate where you're at in your collecting journey. Because a lot of people are just getting sucked into these cycles, not realizing how dangerous it is and how harmful it can be, because it's disguised as a childhood hobby.
Yeah, you're absolutely right. Do you think, in your sessions, with Collectors MD, do you think having people set kind of upfront guidelines to an amount that they're willing to kind of invest has been helpful? Like, because for me personally, and I know you're not a huge fan of it, but I still love to gamble on sports, usually only on Sundays on NFL. Like, I'll go into, each NFL season with, okay, I'm okay losing this amount, or, this is the amount I'm going to risk, per se. And, occasionally, I'll bet something where I'm just chasing something. But for the most part, I'm doing 1 or 2 parlays. And, like, if I lose the money on Monday, like, I'm fine. I don't have to think about it. Right. So, like, I guess I'm lucky that I'm a little disciplined in that area. But, I feel like you almost have to approach sports cards in a similar fashion, because you can just spend so much money so quickly, and it's super expensive to what we were just talking about.
Yeah. Having a budget, having a plan where, you're telling yourself basically that you can only spend X amount a week or a month on this particular activity, whether it be sports cards, traditional investing, gambling on sports bets, or anything else, casino, blackjack, whatever. Having like a strict budget where you set aside a monthly allowance to do something leisurely, I think for somebody who is practicing intentional collecting or harm reduction across these different verticals, is extremely important. Because without a very strict budget, it's so easy to overextend beyond your means, beyond your personal limitations in the moment. You get, and it happens to the best. It could be the most, and I've seen it firsthand, right? In GA meetings at Right Choice Recovery, where I work on Monday nights and Tuesday nights, and in our weekly meetings at Collectors MD, we're seeing more and more of this. These are established, professionals who are extremely successful, married with kids, you know, the American dream, right? And then they get sucked into something like the sports card hobby, and there's that sense of urgency and FOMO and excitement, and the manufacturers and platforms know exactly how to pull their heartstrings. And so very often these people find themselves in cycles that they can't break.
Yeah.
And they go down these paths and suddenly they're at a loss because excuse me, because they're losing custody of their children and they're having to sell their homes and, you know, their jobs, and their wives are leaving them. And I mean, we're seeing this happen more and more every single day. And it's like people join these meetings and they look like a deer in the headlights. They didn't even know it was coming because it all happens so quickly. 2 a.m. hits, they're in a break, and suddenly next thing they know, they've spent $5,000, $10,000, $50,000 in one night. And they wake up the next day and they're like, what the hell just happened? And I know it sounds like, well, you know, why can't you just turn your phone off or control it, or like, you know, be a responsible adult and act like one. It's easier said than done, again, when you're in the heat of the moment. You've experienced it. You know what being on tilt feels like. You know what it feels like after getting smoked on a bet, or like, you know, a last minute buzzer beater or a missed kick or something like that. It's gut wrenching. And so when you add in that layer of excitement and passion as it pertains to sports and players and cards, it's a recipe for, you know, emotional disaster is really what it is.
Yeah, no, I agree. I mean, it's very similar to flat out gambling to me. And you know, it's a shame that the prices are still this high after all this time. I would hope they would have made it more reasonable. But you know, look, we'll see what happens. I do think, you know, obviously what you're doing with having people just be accountable and talk about it, having support groups, you know, which didn't exist historically for this specific hobby, is great. Just having the overall awareness, you know, telling people they're not alone, because you're absolutely right. Like, you can, you know, one component of it, and you know, you've been a victim of it yourself, is some of these breaks, like, they're giving you credit and you know, expecting you to pay them back another time, and you could rack up an insane bill in a very, very short amount of time.
Exactly. It's not even a matter of like swiping your card. It's like one of the breakers that you've been ripping with.
Different. It's not your money yet.
Right, exactly. It's very dangerous, and it's a slippery slope. And someone who trusts you and you've spent a lot of money with over the years might reach out and say, hey, I got 2 cases of Prism football. Let's hop on, you know, Instagram Live or wherever, and let's rip. And you're like, all right, sounds good. Like, I'll do a box and I'll pay for it at the end of the week. That's no problem. Then you rip the box and he's slow rolling the card, and you see a rookie badge with a Denver Broncos helmet, and you're like, oh my God, this is going to be a, you know, $5,000 Bo Nix True Gold rookie. And then it's Troy Franklin. And you're like on tilt. You're on tilt because of that. So you're like, all right, we got to go box 2. And then next thing you know, you're 2 cases deep, and you're like, the guy's like, all right, well, now you owe me, you know, 15 grand. And you're like, how in the world am I going to pay off this tab? Right. So a lot of that happens. It's very similar to gambling in terms of, like, you know, you have a bookie and you have to pay the bookie on Monday. And, you know, it's that same sick feeling in your stomach where you're like, all right, now I got to, you know, pony up this money that I don't have. We see it all the time, but the same thing is now happening within the hobby in the sports card world. So let's shift gears here. I want to move over to the next segment, which is when investing becomes entertainment. So let's talk about where the line starts to blur. From your perspective, when does investing stop being investing and start functioning like gambling? And I'm not just talking about investing in sports cards here. I'm talking about like traditional investing, day trading, crypto, NFTs, the whole, you know, covering the whole gamut.
From my perspective, it all comes down to diligence. Are you placing an educated bet on, you know, a security? It could be, you know, stock, crypto, could be car, could be real estate that you're well educated in, and you have a foundational investment thesis that you've thought out, you have experience in, you've analyzed the risk versus the reward, and, you know, various return scenarios. And it doesn't have to be, I'm overcomplicating it, but when I'm making, for instance, an investment in a public stock, um, I'll read everything publicly on it. I'll pull research. I have access to software that helps me do that, and I have been doing it my whole career, so I can really synthesize a lot of the materials because I used to do it on Wall Street. And I will never, you see in our group chat with, regarding crypto, like unless someone is, telling me an angle and has really done the work on something, I'm a pass. So to me, that's reasonable diligence, and you can feel comfortable. And if you, lose money on the investment, so be it. Um, when you just kind of do something from word of mouth and there's very little thesis and you're just chasing a dopamine rush or a huge hit, that is, to me, that's speculation. That's associated with gambling.
Yeah, we talk a lot at Collectors MD about the gambling mechanics, the near losses, the loss chasing, the illusion of control, the dopamine hits, the just chasing the next purchase, whether it be a stock or cryptocurrency or a sports card. Like at the
Yeah.
end of the day, there's an underlying chase mentality and dopamine rush, that adrenaline, that fix, that feeling of excitement that people chase across each one of these verticals. So how often do you see some of these mechanics showing up in things like day trading and crypto cycles and speculative investing?
There's a there's a lot of warning signs. Crypto specifically, there's absolutely no transparency, and like for instance, I was an investor in Luna, also known as Terra, right? And it turned out to be a Ponzi scheme. It literally went to zero overnight. So like there's at various different stages, there's like levels of regulation, and that would never happen or it has happened a couple of times, but for a public company on the Nasdaq or the New York Stock Exchange, to me, um, there are various levels of risk tolerance across the asset classes, and I tried to be responsible when it came to the hobby. I used market movers, I used card ladder, I looked at eBay past sales, I spoke to you. I tried to have a thesis and an angle and understand. Okay, this seems undervalued. I thought I had an edge. To I had no way of validating this, but I would have assumed that I was at the upper echelon in terms of just like having sports knowledge because that's all we did in college and post college, just watch games every night, right?
Mhm.
So unfortunately, I just there was no right way to know if you're making a good investment in the hobby because there was very little transparency, and what moved things one for one specific type of card didn't apply to the next one. So it got very frustrating, and that's ultimately why I kind of not made any recent plays in the sector.
Yeah. It's crazy. Like from a collector's perspective, the similarities are actually pretty obvious once you take a step back and look at this whole thing, from the outside looking in. With things like you're talking about, the day trading, the stocks, the crypto, you're watching charts, you're watching timing entries, you're watching or chasing momentum, you're reacting to, green and red candles. In cards, it's releases, it's comps, it's breaks filling, it's auctions ending, countdown clocks ticking. There's a
Yeah,
different language, but there's the same behavior. You feel the same urgency. If I don't act now, then I'm going to miss out. And the
yeah,
same validation when something actually hits, right? The same regret when it doesn't, and the
yep.
same impulse to immediately make another move to fix the last one, right? And what's tricky is that in the hobby, it doesn't feel like investing or trading. It feels like you're collecting. It feels social, communal, nostalgic. So your guard is down, even though your nervous system is reacting the same way it would if you were staring at a trading screen all day.
It's
And when
very
we,
similar. Yeah, very similar to art, which I have no interest in, and never will have an interest in investing in because just I've never been into that. But to me, it's like why one specific card is more valuable than another. It's kind of similar to the art industry. And that was the baffling and frustrating part for me. At least with crypto and stocks, right? There's investment research for the most part that you can actually read. To your point, all you have is comps, and when you would try to, look at comps, a lot of times you were still losing money because it just didn't make sense. It just came down to the value is what someone is willing to pay at that time.
Yeah. And there's just so many variations of cards nowadays where, people are using, like, for instance, a one of one. You can't find a comp on a one of one. So
Right.
people are using the comp on a variation of that same player, a one of one of that same player, or a player of similar caliber. But I think, like, you brought up Card Ladder and Market Movers before, and what they really do is distill all of this data into an ecosystem or platform that very
Yeah.
much looks like, a stock ticker, or
Yeah.
a screen that a broker looks at. And so because of that, I think that sort of attracted you too, because it was combining the two things that you're most passionate about and allowing you to potentially invest from an analytical standpoint directly into players, or sports. And
Yeah.
so when you bring all of what we just talked about back to the hobby, the breaking, the live auctions, the countdowns, it's different packaging, but again, the same nervous system. So do you think people underestimate how much emotion and not logic is driving these decisions?
Oh, absolutely. I mean, I would suspect a lot of the bad financial decisions come after getting skunked in a $1,300 box, right? You think you can't be that unlucky forever, or you enter a break and you hit nothing, so you just keep rejoining and rejoining on credit. I think emotion is certainly a huge driver. Within that.
Yeah. And do you think emotion is the same driver, or like that same type of emotion as a driver in things like day trading and crypto investing and things like that?
Not as much. I think it's a lot more of the fundamentals, and they're much more liquid, right? You can exit positions in milliseconds versus you know back when we were doing it, right? You would have the raw card, and after getting it graded, and and dealing with the whole eBay process, like it was not as liquid as you would like.
Yeah.
So I mean, there's a lot more fundamentals, obviously, in other asset classes, but I would certainly, I would attest it to the same level as me putting a parlay on FanDuel. That's emotion, and if I lose it and I'm having a rough one occasionally, I tilt and I'll double down and until I get my money back. That was that is much more relevant in sports cards than all other asset classes, in my opinion.
Yeah. Yeah, there's a whole process. You brought up a really good point about the fact that cards aren't liquid at all. People say, oh, well, like a Michael Jordan 86 Fleer rookie and a PSA 9, so liquid. But like, yeah, to an extent, if you have an eBay account, or you have a connection at one of these auction houses where you could just get it over to them quickly for them to list it and then pay you out. Yeah, they're faster, methods to liquidating a card, but you
Yeah,
know, there's the other side of it that people don't always talk about, how much is involved in the process. Once you pull a card, right? First, you have to wait to get the card in the mail from the breaker, the card shop, or wherever, unless you're ripping it at your local card shop or just buying a box in person. But then you have to sort of inspect it, the corners, the edges, the surface, the centering. You're already projecting value before anything even happens, right?
yeah,
Then you have to prep it with this, sleeve, top loader, maybe have to clean it up a bit, debate whether it's even worth grading. That decision alone carries pressure, because things like fees and turnaround times and, market timing, all of that matter. Then you
yeah,
have to submit it. Now you're waiting, sometimes weeks, sometimes months, sometimes longer. And during that time, you're checking comps, you're watching the market
yeah,
move, you're hoping that the player stays relevant, like we were talking about before. You're hoping the prices don't dip before it comes back from the
yeah,
grade. And then when
yeah,
it finally returns, the grade feels like a verdict, right? A 10 validates everything. A 9 or worse can feel like a loss, even if the card's still great. Then you have to first list it, right? You have to price it. You have to choose auction versus buy it now. You have to time the listing. You have to watch, the people that are watching the card, whether it be on eBay or another platform. You're refreshing the page. You're hoping it sells before the hype window closes. And by the time it hits eBay, you're emotionally invested far beyond the card itself. You've put time, money, anticipation, and identity into the overall outcome. And that's why this isn't just a transaction, right? It's a full emotional cycle. And when people repeat that process over and over and over again, it starts to look a lot less like collecting and a lot more like trading behavior, but with a lot more hoops to jump through, right?
Yeah. And here's another example. So, if I own Lululemon stock and it has a bad quarter, down 20, 25%, I'm not doubling down. I'm not emotionally not, 2xing the size of my bet because I've lost 20, 25%. I'm just going to wait 3, 6, 9, 12 months for it to rebound, and it's going to come back. Hopefully, if the thesis around it still makes sense. For cards, almost, I can't think of one scenario where this hasn't been the case. But once a card starts nosediving, it very rarely will come back, right? You're kind of screwed. And that's a problem as well.
Yeah. 100%. It's like, look at Tua. He was benched today. Like, is he gonna now reinvent himself in a year from now in the offseason? Is some other team gonna trade for him and hopefully he works out in the long run? Who knows? But right now, like, his market is in the toilet, and people who have been invested in Tua for the last 5-6 years are now sort of shrugging their shoulders and not quite sure what to do next. And the same thing happens all the time. I mean, look at Mahomes, like considered to be one of the greatest of all time. The guy just tore his ACL this week. He's now out for 9 to 12 months. Who knows if he's ever going to be the same again? His market's in question now too. And we're talking about somebody who's already established. If he retired today, he would be a first ballot Hall of Famer, no questions asked, obviously. But still, like, people are scratching their heads and they're like, oh, now's an opportunity to buy the dip because he's going to be hurt for the next year. Well, like, his market shouldn't be affected by a knee injury, but it is, right? So I want to transition over to our next segment, which is volatility, identity, and financial harm. So we're going to shift from systems to people for a minute. What happens psychologically when volatility stops being abstract and starts affecting someone's identity, confidence, and sense of control?
That's a great question. It's a deep question. Volatility is a component of every market. And I think, one way is I was trying to mitigate every investment I had so that, I could go to sleep at night knowing that I was responsible with, not just mine, but my wife, my daughter's, money. So I would always do thorough diligence on any investment I made. I think, I've made a handful of great ones, a handful of poor ones, but I can't say that I just went blindly into something just to make a bet, right? As I alluded to before, I attempted to do as thorough diligence as I could with the limited resources available. And market movers and card ladder are fantastic; they're great tools, and I loved using them. But even with that analysis, I just think the volatility, the fluctuation, and the initial release prices of various different sets just makes it really hard to make money in this hobby. I think if you're going to be spending a ton of money in it, you have to have either a lot of money or you're not doing it for reasons that I was doing it, right? You love collecting, and that's great. You should build your PC. But to me, I just don't see it as a really effective use of capital because of all the points that you made. It's just super volatile.
Yeah. And we see so much shame, these days. People saying things like, I should have known better, or I'm bad with money, instead of recognizing that they were operating inside high pressure systems. So, again, I'm not just talking about the hobby here. I'm talking about all speculative markets. How dangerous is that self-blame when the environment itself is designed to keep people activated?
Yeah, I mean, look, the system everything we talked about, the system is designed to make people lose money, right?
Right.
Starting with, there's so many different variables. I mean, you're spending 1,500 or what'd you say, $3,500 on that. I mean, you got to think that majority of those cards inside, for a vast majority of the boxes, hold less value than actually what people are spending. Right? Everyone just like that's
significantly less. We're talking about $3,500 box. I've seen boxes get ripped this week that they're netting maybe $200 worth of cards at most.
See, that just seems unfair. Like they know what they're putting in there. Like,
yep.
Anyways, look, I think you're absolutely right with it. Everything you said. It's been spot on. You can be shameful and but I think the support groups, right? I mean, to this day, what you're doing is obviously helping people and just being accountable. I think putting boundaries, and hard numbers and limits is something super useful. It's not everyone's going to stick to it, but you're right. Like I felt pretty bad when some of the VC investments I made, which were exclusively focused on sports cards, did not perform as I thought out. And I kind of was second guessing myself. Am I not as good as an investor as I thought I was? And I did the proper diligence. Did I just get caught up in the hype, or did I just really under or overestimate the addressable market for this hobby? And I certainly did. So look, people just need to be responsible, right? Don't spend money you can't afford to lose, because if you're going to do it in this asset class, you're more likely than not going to see a great return.
Yeah, well said. And do you think that this is why people often repeat the same behaviors across different markets, like the cards, the crypto, the stocks, even when they swear they'll stop? Like people just get, again, there's a bigger component here than just being able to self-regulate or control your actions, right?
Yeah, it's a lotto ticket. You see 10x returns on a crypto token that just came out, or you see $5-7 million one-on-ones being pulled, and you want the lotto ticket. I thought about it. Don't get me wrong. I was texting you about Pokemon a couple of weeks ago. I was like, this thing has actually outperformed the S&P for 25 years. Like, I should try to understand this. But then again, right, I'm not making the same mistake twice. Like that can't be sustainable. So, it's complicated. But again, if you can be responsible with it. Like, I still love the hobby and I still hold on to some of my personal collection. But I think as you started this business because it's harmed a lot of people financially.
Right. Yeah, you brought up the lotto ticket component. Every single product that comes out now, especially the flagship products like Topps Chrome, has a lotto ticket type card in it. So, for instance, the lotto ticket in this Topps Chrome set that just released is the Cooper Flag debut patch, 1/1 auto. Right, that's the card that everybody's chasing. Is there a bounty? Is that what you asked?
Yeah,
that's a great question. You remember the Skeens from last year, right?
Yeah.
It ended up selling at auction. Dick's Sporting Goods was the winner. They showcased it at Fanatics. I think it sold for like 1.5 million.
He didn't want the lifetime.
They paid. They purchased it for 1.11 million.
Okay.
So the Cooper Flag bounty, I'm looking it up right now. I don't see. I'm sure there's one that exists, but I haven't seen anybody post about it. But there are videos like Cooper Flag's Topps debut patch will crush the $1.1 million record set by Paul Skeens last year. I mean, Cooper Flag just has like the most hype around him. I know you feel a little bit, you're a little iffy, speculative on Cooper Flag's ceiling. A lot of people
he's done better. No, he's done better. I don't see him as a perennial first team All NBA talent.
Yeah.
Definitely could be wrong on that, but hope for the best. Like for Skeens, like there's no doubt he's the best pitcher in baseball. the
Yeah.
next.
But even somebody like Skeens, like think about how many pitchers, great pitchers, aces nowadays, end up having to get Tommy John surgery. Granted, that's a surgery that they're supposed to come back stronger from, but like look at Garrett Cole. He just missed the last year and a half because of Tommy John's, and now he's only, a year older than he was, and he's on the back end of his career. This sort of thing happens more and more in sports, where injury is just such a variable that people have to account for when investing in players, right? $1.1 million for a Paul Skeens rookie card. And at the time of the sale, all he had under his belt was, a pretty decent partial season as a rookie. I mean, it was a really good season. I think he had an under 2 ERA, but still like $1.1 million. We're talking about, Michael Jordan territory there in terms of like rookie cards.
Yeah.
So it's, again, going back to the whole idea of buying speculation, buying the unknown, buying the possibility that somebody might end up becoming the GOAT in their respective sport or position.
Right. Yeah. I mean, that has to be it, right? Because otherwise there's just so much more risk of the player getting injured, getting kicked out of the league, we're just not performing. You're just holding on to that very minute, chance that they end up being an all-time Hall of Famer.
The only example of a recent player that I could think of that was legitimately worth the investment in terms of panning out long-term. Can you guess who I'm thinking of?
What sport?
Baseball.
No. Who?
Who's the face of baseball?
Used to be Mike Trout. I want to say Juan Soto now because he's my guy.
Come on, you know this. He plays 2 positions.
No, I mean, Ohtani is incredible. And the only, not concern, but I believe he's on the other side of 30 now, right? So, yeah. But I personally think he is the best player of all time. And that game where he had double-digit strikeouts and 3 back-to-back home runs will never be touched in the history of sports. That is the craziest thing I've ever seen in my life.
Which is why his market, there's a meme or there's like a video somebody made parody where he's walking out of a hobby shop every year saying the same thing. He walks out of it in 2021. Damn, I should have bought that Ohtani card. 2022. Damn, I should have bought that Ohtani card. And it's all the way up until this year. And each year the price doubles in value. So he's the one player, the one market that I've seen a consistent increase in over the last, however long he's been in the league, which is 8 years. So
and the international component, don't underestimate that. I mean, he's
absolutely
a superstar.
Yeah. So we're not saying that like all players or all cards are volatile in nature and are going to, eventually crash, or like, you're just buying into pure speculation. There are obviously instances, there are cases where a guy like Shohei Ohtani, supersedes everybody's expectations and just becomes this global phenomenon and arguably like one of the best, if not the best player of all time. But that's generational type of, talent we're talking about. So not every single rookie quarterback or generational prospect that comes into the NBA is going to pan out the same way somebody like Ohtani did. The closest thing that I could think of if he stays healthy is probably Victor Wembanyama. And we'll see if he's able to do that. But think about the ceiling that has been set for somebody like Victor Wembanyama, the expectations that he now has to live up to and potentially exceed. Not many players can exceed expectations that high. The only NBA player that has done it is LeBron James.
Yeah, that's the expectation he has. It's like top 3, GOAT status.
Right.
Because he is that talented, but he's, unfortunately, off to a rocky start in terms of staying healthy. The performance has been outstanding, even though Knicks beat him last night.
Yeah, the Knicks did beat them last night. But I do think that Spurs, I was telling you guys in the group chat, I think the Spurs backcourt between Castle, Harper, and De'Aaron Fox, plus they've got like Keldon Johnson and Devin Vassell. I mean, I think it's just a really impressive young core. And, we'll see what happens in the Western Conference in the coming years with obviously OKC looking like they're going to become the next dynasty. And, of course, you have the Lakers and, the Rockets and a handful of other teams that are really, really competitive this year. So, you know,
Yep.
you again, guys, you could still love sports. You could love watching and consuming sports content without going overboard and, you know, sticking to the purity of it without having to have skin in the game every single time you watch. So, with that, we're going to shift over to our final segment, which is guardrails without killing growth. So, this is where I really value your corporate and finance perspective. So, from your experience, Eric, what guardrails actually work without killing growth or innovation?
In terms of making an investment.
Yeah, in terms of like making sure that you're not overextending yourself, right? For instance, like you see a really hot commodity or opportunity to invest in something, and you know
Right.
your friends are saying like, you know, throw the mortgage at this particular stock or crypto, like it's a can't miss.
Yeah, I get
Like,
it.
how do you protect yourself from going
Yeah.
overboard in real estate?
So what I like to do, especially now that I'm doing M&A for a company and it's through an investing lens. So like we're looking at opportunities to acquire and bring them into our company. So as part of that, you know, I have to show my board of directors opportunities. The way that I like to think about your question is showing a bull, bear, and base case, essentially three different scenarios. What is most likely to happen? You know, base case, right? What is the upside if things go right? What could that look like? What's worst case scenario? And then apply, you know, factoring in as much data. You know, for me personally, we do a ton of modeling, look at a ton of comps. You know, I don't want to get super deep, but looking at synergies and efficiencies across the board, but really understanding and attributing a likelihood of each one, and then just looking at the overall return from that perspective. So what I'm gonna, you know, say next is if your bear case is, oh wow, this could literally go to zero, or you know, it was 90% like crypto, then your bull case better be a 3, 4, 5x, right? Because you know your risk adjusted return has to make sense. If you're going to take the risk of losing all of your capital, your upside better be, you know, tremendous. So if you think about it, you know, and I tried to do that in sports cards, but it's impossible because you can't really put logic or rationale into the value of cards, even with all the great data points that, you know, exist today. So that's what really frustrated me. But in terms of just overall other asset classes, you know, as I said several times, I like to do thorough diligence. I like to invest in something I understand, and then I like to just think of the different scenarios of getting the capital back, and then, you know, from there making an informed decision of what I'm willing to pay.
Gotcha. Yeah, really well said. I think that, you know, we have a lot of folks that could learn a thing or two from somebody like you with your type of experience and just knowledge in this space. And you know, I think, you know, as we continue to grow, I would love to connect with you on ways that you can help me flesh out something like a program or like a starter kit, or you know, just like a list of things to follow or abide by as you're investing in things beyond just sports cards. So
Yeah.
um, I have a few more questions for you on this topic, and then we're going to transition to our rapid fire round. We talk a lot about slowing things down, you know, the cool off periods, the education, the transparency. So why do you think those ideas are often resisted, even when they're clearly protective?
Slowing things down. Can you give more context around that?
Yeah. So, like, in the context of like gambling, right?
Right.
There are things called a cool off period where
Oh, right. Yeah.
if you feel like if you feel like you're spiraling out of control and you can't stop yourself, right? That self control, the self discipline component. There's a feature in most apps where you can actually cool off and you can't access the app. We talked about that before.
I've self-excluded on FanDuel and DraftKings, but now there's 8 other options in New Jersey, and I just downloaded ESPN Bet, you know, for the start of the football season. So I think there, you know, if you want to, there's very easy ways to kind of get around it.
Yeah. Yeah, that's the major issue in this space is that, well, first of all, for the hobby, there are no guardrails. There are no there's no oversight or regulation or way you can cool off or set a deposit limit. there are no age gates, so like children can access these apps, and it's just gotten really out of control in a lot of ways. But specifically to gambling, sure, you can self-exclude in the state of New Jersey and prevent yourself from accessing one of these apps on your device, but there are ways around it. And I'm not going to sit here and list them to give people ideas, but you have to protect yourselves in more ways than one. And rather than resisting on some of these ideas and concepts, we need platforms and manufacturers and influencers and hobby shops and breakers to get on board with what we're doing in order to, at the end of the day, protect your customer, right? You might jeopardize short-term revenue, but the long-term health and safety of the hobby is so much more important than any short-term revenue that is going to be, potentially minimized as a result of creating simple guardrails. And so if you had to name one mindset shift for investors or collectors that could reduce harm without removing opportunity, what would it be?
One mindset shift. I think it would be able to come up with an investment amount that you're comfortable losing it all. Because I've had that happen a couple of times where I've actually gotten zero back. I've had a couple of times where I've, 10, 20x, right? Across all different asset classes. But, it never got to a point where I was going to struggle to pay my bills, or it was money I didn't have or I needed, right? I always set certain thresholds of, my financial opportunities, and I'm allocating this much to, stocks, this much to maybe more speculative stuff. And like, I'm okay, if it doesn't work out. So you have to be financially responsible and just understand your limits. And if you truly are just looking for a lotto ticket and trying to get the 1 in a million, I definitely think there's places you'll have better odds than this hobby.
Yeah, really well said. It's all about just protecting yourself, setting, limitations, setting budgets, making sure that, if you wind up in an uncomfortable scenario, you have a safety net, you have the safeguards and support systems in place if or when you get there. So it's all about, spreading awareness, educating, getting the word out there, and eventually in due time, we really hope that we can help many, many people who are struggling. So with that, we're going to transition over to our rapid fire reflection round. I'm going to ask you a question. You're going to hit me with your first and honest thought.
Okay.
So one investing behavior today that feels most gambling like.
Leverage.
One hobby behavior that mirrors trading psychology too closely.
One hobby behavior. Speculation.
The biggest myth people believe about control.
That markets are fairly priced.
One thing people misunderstand about risk.
Risk-adjusted returns. Critical.
Okay. And lastly, in one sentence, where do you think we truly are right now?
I think it's unfortunate when I heard, because I hadn't been following it as deeply as I used to, but I was hopeful Fanatic would make it more, entry level friendly and financially okay. When you have these initial prices that are just so outrageous right out of the gate, that's naturally going to have, a direct one-for-one feedback loop to the price of getting a break or buying a raw card on eBay. And as they only go up, right, you're just going to only get, people with larger and larger losses. So I was disappointed to hear that. I hope they change, but we know how companies work, right? It's all about profit and loss.
Yep. Yeah, really well said. And, one of the biggest shifts that we've seen is that the average collectors are just getting priced out. Boxes are now hundreds, sometimes thousands of dollars. Grading costs add up, shipping, fees, taxes. It all stacks quickly. What used to be something you could, participate in casually for, a couple $100 at most, now requires real disposable income or risk taking just to be involved. So, people adapt. They move from buying singles to chasing breaks, from collecting to flipping, from enjoying the hobby to trying to make it make sense financially. And that's where things get distorted, because the hobby stops being accessible and starts rewarding only those willing to take bigger and bigger swings. And the irony of it all is that a lot of collectors aren't spending more because they want more. They're spending more just to keep up.
Yeah.
So with that, Eric, seriously, thank you, not just for coming on the show, but for bringing clarity to a conversation that so many people feel but can't quite articulate. What we're really talking about here isn't money, it's emotion, identity, and how modern systems keep people chasing without realizing it. If any part of this conversation resonated with you, whether through investing, collecting, or anything that started as fun and became stressful, you're not alone. Collectors MD exists to give people language, awareness, and support before things spiral. We host free weekly peer support meetings every Wednesday from 8 to 9 p.m. Eastern, and a Thursday meeting from 7 to 8 p.m. Eastern in partnership with the Problem Gambling Coalition of Colorado, called Unboxed, powered by Collectors MD. All of our tools, resources, and support offerings can be found at collectorsmd.com. Also, be sure to subscribe to the Collectors Compass on YouTube, Spotify, Apple, and all major platforms, and check out our other shows, Behind the Breaks and Collectors MD Features. I'm Alyx Efron. This is the Collector's Compass, reminding you to collect with intention, not compulsion. We'll see you next time.